Hi, this is Shanna David with Advanced Tax Solutions CPAs. This little video that we're putting together is to help educate you on how your money's taxed. We want you to understand this. This is one of the most valuable assets you can have in your arsenal as an entrepreneur, because it can save you thousands and thousands of dollars if you understand these principles. Being self-employed can be really overwhelming. You've got to wear all the hats of your company when you start. You've got to be the ad specialist, you've got to be the human resource department, you've got to be the customer service rep, and you've got to actually do the work that gets you paid. It can just be so much that many things can fall through the cracks, and I understand that. I talk to many business owners that feel this way, and usually the thing that falls through the cracks the most is the bookkeeping and the tax preparation and the tax planning, because they just don't have time to think about it. So this video is to help you with that a little bit so you can understand how your money's taxed and maybe give you some ideas of how to plan. When you were an employee for someone else, your paychecks had money withheld that went to the government. This money included tax prepayments or withholding and FICA and Medicare tax. The IRS required you to pay 7.65% of the FICA and Medicare and required your employer to also pay 7.65% on your behalf. Now that you work for yourself, there's no one to withhold and pay the FICA and Medicare tax for you. But the Social Security Administration still wants their money for your FICA and Medicare. How do they get it? Self-employment tax. Since you work for yourself, the IRS gives you the responsibility to pay both shares of the 7.65% FICA and Medicare tax, which adds up to 15.3% of your profits. If you have profits of $40,000, this is about $6,100. And this is in addition to your income tax, which is anywhere from 10 to 35%, depending on your personal tax situation. What can you do to not have to pay so much self-employment tax? Luckily, there are ways to mitigate this 15.3% self-employment tax. The best way is turning your company into an LLC that is taxed as an S corporation. An S corporation allows your money to be classified in two ways: passive income and active income. Self-employment tax is not calculated on the passive income. The only self-employment tax you will pay will be on your active income. We calculate that to be between 30% and 50% of your profits. You will take this active income as a wage or a salary from your company. The remainder of your profits are considered passive, and they'll flow to you on your personal tax return on a K-1 from your company. This income will not be subject to self-employment tax. So on that same $40,000 of profit we talked about before, you could give yourself a wage of $12,000 to $20,000. Now, under the S corporation, you're only paying $1,800 to $3,000 in self-employment tax instead of $6,100. This is a huge tax savings. I know this probably sounds too good to be true, but I promise you it's not. There are some additional laws that you have to follow to be a legal S corporation, but I'd be happy to go over those with you and explain them to you. Please give me a call and we can discuss this. My number is 801-999-1340. I'd love to talk to you about it. Consultations are always free. There's no obligation. I just really want you to have the education and tools you need so that you don't overpay in your taxes.